Gold prices reach the highest level in months as economic and geopolitical risks drive demand. Hi everyone, and thanks for joining us for a brand new year of insights, brought to you by Ainslie Bullion and the Gold and Silver Standard. Today we welcome Branko from the Ainslie team. After some time off, it's great to have you back here to dig into what has been a pretty eventful end of 2022 and start of 2023. So welcome, Branko.
Thanks for having me on. It's great to be back and keen to delve into all the exciting stuff we get to talk about today.
Excellent, because there's been some pretty big macro data and interesting price action for gold and silver that we've seen over the last couple of months while we've sort of been on break. So are there any things you've been looking at that have really stood out to you over this time?
Yeah, so I think in terms of macro data, obviously we've got the inflation numbers and how that affects it, the constant kind of battle with interest rates that we see going on. On a more kind of qualitative note, you've got the China lockdown policy and how that's going to impact with China opening up. Are they still going to buy as much gold? A lot of different things we get to talk about that are going to impact gold's price in 2023. And, it's a very interesting time to be a part of it.
Yeah, and there is a lot there to break down, so probably won't even cover it all today, but we'll certainly dig into a few things because a lot has been happening. And I might just point out this moment as well. We've had Joe put up those videos recently with the long-term 2023 outlooks for gold, silver, and I think even platinum was in there in the one he did this week. So plenty to look at there on the channel. But turning to what you just mentioned about China, that's one that has been interesting to me because the China policy has changed. We went really from complete lockdown to pretty much completely open. So that seems to have had an impact on gold. What's your sort of take on that specifically? Like, how are you seeing that playing with gold?
I think the reason that it's important is because China was the big mystery buyer last year. They bought more than any other nation, right? And a lot of that is probably attributed to their, kind of falling real estate market and the struggles in their economy. And so I think with their economy opening up, they could potentially buy less gold, and that could be potentially a bearish thing for bullion. But definitely their policy, I think, is something to continue to monitor because of the amount of volume they're doing with gold. We always need to keep on top of what they're doing.
Well, and you could look at that the other way as well, because there is an argument that, yes, as it all opens up, that reduces demand, or they could be looking more broadly at trends that really encourage them to keep buying, because it's not only been China that's been buying, has it?
Yeah, that's correct. I mean, so many countries have been buying, India, UAE was another. Yeah. And on that point, I think in the short term, like I said, you could argue it could be bad, but in the long term, if China has this sustained buying, that could be part of a more macro trend of these countries moving away from the US dollar. So,
yes,
it's not necessary that it's going to be negative in the long term, but just something to keep an eye on is the China's amounts that they purchase.
And we did talk about that last year, and I've seen more stories starting to emerge over the break as well around the BRICS really strengthening and expanding their membership, I suppose, to allow other people to come in. So they really are looking at providing a base to move away from the US dollar as the global reserve, with direct trade and lots of other things going on there. So I suppose that leads into my next question around the Aussie US dollar, because the US dollar obviously has been very strong. We've seen that little bit of weakness over the last couple of months from those highs, but still overall much higher than where it was this time last year. So where does that sort of come into play when you're looking at the price of gold and silver?
Well, I think it's a good thing for Australians in many ways, because I think it presents, if you, as an Australian, if you bought in Aussie dollars, now I think it's kind of a value proposition if it's priced in US dollars for US buyers. So you're going to get more of a flow of that US money coming in because of the price of the US dollar relative to gold. Gold's a lot weaker, if that makes sense. So I think that Australians who have owned, bullion throughout this year are in a good position now for if we do get that bull run that is, the one of the main catalysts being US people and institutions. I think that's going to be very beneficial.
And when you talk about institutions, we've seen some interesting things there as well, because we've had sort of a little bit of a difference between what we've seen from the institutions buying and what we've seen from retail buying. So what's your sort of take on that?
Yeah, I think this is a very interesting point in that retail buying has been consistently, quite high. And I think since Q3 2022, the sale of bars and coins were 3% higher relative to that time in 2021. And that's kind of a consistent theme that we're seeing where retail is buying across, and institutions and central banks are buying too. But the interesting point here is that the sentiment is different across the different groups. So we constantly have analysts coming out and hedge funds coming out saying, warning everyone, recession coming, blah, blah, blah. But, retail are really starting to think like it's already here. And we've kind of seen that as Ainslie as well, like a first-hand situation where, we've had a massive run on silver, particularly the past couple of months. So I think that like the dichotomy in narrative between the two, where you have institutions saying recession's coming, but a lot of the smart buyers in retail have been knowing this for a while, and so they're already kind of ahead of the game. So I think they're, yep.
I was just going to say, there's often this sort of feeling that the institutions are the smartest people in the room and that they're making the right decisions. But are you effectively arguing here that retail, the everyday gold and silver buyer, might actually have a little bit of an advantage in this?
Well, yes. I mean, I'm not saying institutions aren't buying at all, because as you know, these central banks in particular have been buying it up quite a lot. But it's more just the narrative that is being presented to us by a lot of these hedge funds is, like we know, for example, they changed the definition of a recession, right? So they're saying a recession's coming, but most people probably knew the recession was already here in, June earlier in the year. So it's more the narrative shift that I find interesting, and that people that were kind of on the ball prepared themselves, 6 months ago.
And the whole Wall Street sort of argument about whether we're in a recession or not, I certainly think the point that you've made, the average person has felt that we're in some form of environment that's not great. So it might not be technically thinking of it as a recession because they've still got their job, but inflation has been a big part of that. So from their overall spending power and their overall general feeling of what it is to live through this period of time, I think most people would feel that they've been not living as well as they might have in the past. Is that what you would sort of think?
Yeah, and I think kind of, often we might think that institutions and smart money are aware of trends beforehand. However, I think this is a unique case because often with this, like I said, macroeconomic data, people already feel it before the data comes out. So these people are saying we have a recession now based on the past 6 months, when 6 months ago, people's rates are going up 1,000 a month and they were already preparing for this. So I think that's why we have this kind of narrative difference at the moment. Right.
And so just a slightly different angle on that, interest rate predictions. So the Fed, we're not quite sure what's going on there. We've seen some indication that maybe inflation was slowing down in Europe, so that probably is good for the Fed potentially pausing. But then the latest non-farm payrolls data that came out was very much showing that the job market is still very strong in the US, which would indicate potentially that they keep going with raising rates. Potentially inflation's not squashed just yet. What's your take on where we're looking at the moment in terms of that Fed positioning? And probably the next question that follows on from that is, how does that impact gold?
Yeah, so I think that the good news for gold is probably going to be that almost irrespective of Fed policy over the next year or so, I think we're going to see the impacts of the previous cycles kind of increasing rates and, increasing interest rates. That'll obviously help gold and, be a positive force for it. And I think even if they do pivot, like what we've been seeing with the inflation numbers lowering, particularly in Europe, it's not going to really matter that much over this year because so much damage has already been done that hasn't been reflected in the numbers. And then when people see those numbers, we'll see, the push up higher.
So overall, I'm sort of getting the feeling that your perspective is that it doesn't really matter. We're looking for about what happens in that macro environment. Of course, it matters specifically what happens, but it doesn't really matter overall. We're probably in a pretty good-looking environment for gold over the next year.
Yeah, just because of what has happened in the previous cycles. And
so what's happening this year in the data probably will impact further down the road, but where we are at the moment, we're looking pretty good.
On top of the high chance that they could just continue these rates because of what you're saying about the employment, which has been extremely strong and, almost too strong to an extent. That's what a lot of, policymakers are trying to curb. So you have that as well, the potential of increasing, these rate rises, along with, like we said, just the economy just continuing down the, poor route it's currently going at the moment, which is good for gold, obviously. Sure.
Well, Branko, it's been great to catch up with you. So thanks for joining us to start off this new year of insights. We really appreciate that. And thanks for everyone. Thanks for everyone for watching. If you have any comments or questions, we'd love to hear from you. So reach out on our socials. Your feedback really helps us refine and craft what we need to do in order to best meet what you want from the show. So the more you tell us, the more we can adapt. We'll be right back at it on Wednesday and Thursday. So until then, take care and good luck out there.